Today's topic is Introduction to Corporate Accounting. Today we are going to discuss cash flow statement and corporate financial statements as per Companies Act 2013. Let us first understand what is included in financial statements. Section 2, subsection 40 Companies Act 2013 provides that financial statements in relation to company includes: first is a balance sheet as at the end of financial year. Second, a profit and loss account, or in case of company carrying out activity not for profit, an income and expenditure account for the financial year. Third is cash flow statement for the financial year. Fourth, statement of changes in equity if applicable. And last is any explanatory note annexed to or forming part of any document referred to subclause 4th as stated earlier. Before discussing cash flow statement in detail, let us first clarify its objectives. The cash flow statement's primary purpose is to provide information regarding a company's cash receipts and cash payments. Objectives of significance of preparing cash flow statements are: first is to know the movement of money in and out of the business. Second is, it is a financial tool which forms the basis for the projection of future investing and financing plans of the enterprise. Third is, it explains the most important distinction between profit earned and cash inflows. It supplements the profit and loss account and balance sheet. Fourth is, statement of cash flows provides important insights about the liquidity and solvency of a company, which are vital for survival and growth of any organization. Fifth is, cash flow statements presents the movement in cash flows over the period as classified under operating, investing and financing activities. A question may arise in your mind whether cash flow statement is voluntary or mandatory to prepare and present. Moving ahead to cash flow statement, Accounting Standard 3 revised. It is mandatory in nature in respect of accounting periods commencing on or after 1st of April 2001 for certain enterprises like: first is enterprises whose equity or debt securities are listed on a recognized stock exchange in India, and enterprises that are in the process of issuing equity or debt securities that will be listed on recognized stock exchange in India as evidenced by the Board of Directors resolution in this regard. Second is all the commercial, industrial and business reporting enterprises whose turnover for the accounting period exceeds rupees 50 crores. Now, let us discuss cash flow statement in detail. As per AS 3, cash flow statement should indicate cash inflow and outflow in 3 broad categories, namely operating, investing and financing activities. Let us discuss in detail. First is operating activities. Operating activities are the principal revenue producing activities of the enterprise and other activities that are not investing or financing activities. Therefore, they generally result from the transactions and other events that enter into the determination of net profit and loss. Some examples of cash flows from operating activities for manufacturing or trading firm are: first is cash receipts from the sale of goods and the rendering of services. Second, cash receipts from royalties, fees, commissions and other revenue. Third is cash payments to suppliers for goods and services. Fourth is cash payments to and on behalf of employees. Fifth is cash receipts and cash payments of an insurance enterprise for premiums and claims, annuities and other policy benefits. Sixth is cash payments or refunds of income taxes unless they can be specifically identified with financing and investing activities. While examples of cash flows from operating activities for a banking or financial firm are: first is long-term borrowings, second accepting public deposits, third is purchase and sale of investments, fourth is repayment of borrowings and deposits, Fifth is receipt of interest and dividend on investments. Sixth is payment of interest on borrowings and deposits. Now, the next topic is investing activities. This includes activities related to acquisition and disposal of non-current assets and non-current investments. Some examples of cash flows arising from investing activities are: first is cash payments to acquire and to construct fixed assets, including intangibles. Second is cash receipts from disposal of fixed assets, including intangibles. Third is cash payments to acquire shares, warrants or debt instruments of other enterprises, that is non-current investments. For a financial enterprise, it is an operating activity. Fourth is cash receipts from disposal of non-current investments, and for a financial enterprise, it is an operating activity again. Fifth is cash advances and loans made to third parties. For a financial enterprise, it is an operating activity. Sixth is cash receipts from the repayment of advances and loans made to the third party. Seventh is cash receipts of interest and dividend from non-current investments. Our last topic is financing activities. Activities that result in changes in the size and composition of owner's capital, that is equity and preference shares capital in the case of a company, and long-term borrowings of the enterprise are called as financing activities. Certain examples of cash flows arising from financing activities are: first is cash proceeds from issue of shares, debentures and bonds. Second is cash proceeds from long-term borrowings. Third is redemption of preference shares, debentures and bonds. Fourth is repayment of long-term borrowings. Fifth is payment of dividend on shares. Sixth is payment of interest on long-term borrowings. Here it should be noted that activities relating to long-term borrowings and payment of interest on it are operating activities for a financial enterprise. Now, let us see the specimen of cash flow statement as per AS 3. Let us understand the preparation of cash flow statement from given balance sheet with a practical example. Prepare cash flow statement for the year ending on 31st March 2015 on the basis of given balance sheets of Hind Limited as at 31st March 2015 and 14, and also give the comment. Additional information is also here, which is depreciation provided during the year: land and building rupees 400, plant and machinery rupees 300, tax paid during the year rupees 280. Let's see the cash flow statement for the year ended 31st March 2015. Its analysis is book profit for the year ending 31st March 2015 is rupees 1500, but cash profit from operating activities is rupees 3200. Cash flow is also generated by issuing equity shares and debentures of rupees 4000 and rupees 3000 respectively. The company has invested rupees 5700 in purchasing non-current assets as a part of expansion or diversification. Now, let us aware of corporate financial statements as per Companies Act 2013. The Schedule 3rd as per Companies Act 2013 requires financial statements to incorporate first general instructions, Part 1 balance sheet, third is general instructions for preparation of balance sheet, fourth is Part 2 statement of profit and loss, fifth is general instructions for preparation of statement of profit and loss, sixth is general instructions for the preparation of the consolidated financial statements. Schedule 3rd prescribes the format of balance sheet and profit and loss account. Now, let us see the balance sheet. To conclude this, today what we have discussed is financial statements of the company, which includes statement of profit and loss, statement of balance sheet and cash flow statement. Thank you.